Thanks for joining me today. We're going to be talking about diving into something that confuses most people, but it can't be ignored, and that is managing sales tax in multiple states. So let's get started with a little bit of truth that we can all stand on, and that's from Galatians 6:9. It says, "Let us not get tired of doing good, for we will reap at the proper time if we don't give up." And that's really important. And navigating sales tax, especially multi-state, state-by-state sales tax rules, isn't really a flashy topic, but it is good stewardship. And it's how we stay above reproach, build peace of mind, and keep more of what we actually earn. I'm going to dive deep and give you some step-by-step real example as we dive in here. So let's get started. My name is Jacob Curtis. I'm a CPA certified Profit First professional and outdoor enthusiast. My mission is simple. That's to help business owners like you finally get paid, master your cash flow, and run a business that gives you freedom. I started Curtis Accounting Solutions because most business owners don't need more spreadsheets. They just need a plan that actually works, even with inventory, seasonal sales, and cash flow camps. Now, if that's you, you're in the right place. So drop a comment, hit that like button, share the live video, share this video, and remember to follow along. So let's dive in. Now, sales tax nexus is just a fancy word or a way of saying, do you have a reason to collect sales tax in a given state? For example, if you sell 100K to California, that's economic sales tax. If you have a warehouse in Texas, that's physical nexus. And if you meet that threshold, or any of these thresholds that are set by the states, you must register, collect, and remit or pay sales tax for your sales into that state. Think of it like setting up a camp. Once you're there, you've got responsibilities. You got to set your tent up, get your feeding and cleaning area, your fire going, find water source, all those good things, right? Lots of responsibilities once you get to your state or in your final place. Now, if you sell on Amazon and they store your inventory in a warehouse in Indiana, guess what? You have nexus now in Indiana because your inventory that you own is being stored in that state. And same with Shopify sales. If you have over 100,000 sales or just 200 transactions into Colorado, now you have nexus in Colorado. Maybe you have a remote team member in a totally different state like Oregon or something. Well, guess what? That's another trigger. And now you have a sales tax in the state in which you have that remote employee. So it doesn't always mean that you have to have a storefront to owe sales tax to various states. You can have sales tax in any state you have a physical presence, whether it's an employee or a warehouse, or economic nexus is when you reach the state's threshold for paying sales tax. So we're going to start with your sales reports. This is how we're going to be able to find and track your tax triggers, right? Platforms like Shopify, Amazon, Etsy, and others break that down state by state because they know how important it is that you understand where you owe taxes. For example, if you have done $110,000 in sales to Illinois, you've now crossed that threshold. You now owe sales tax and triggered that nexus, so you owe sales tax. And 85,000 into New York, you're getting really close. Not quite there, but you're getting really close. So what I would recommend is keeping tabs on where you're sending and getting your sales from. Create a quarterly rhythm to check in on this. Maybe even tie it to your profit first allocation date. Now, once you've got nexus, step one is easy. You register with the state. Most states make this really simple to do online. Second step is to configure your platform to collect and remit those sales tax, or at least to collect that sales tax. Step three, and the final step, is really to file and pay when the state says to. Sometimes, depending on your state, it'll say file monthly, quarterly, annually, or even twice a month, I've seen. So there are a lot of different requirements that you've got to manage and keep ahead of. So if your rhythm is off, say you're late or you underpay, you're going to risk some penalties and fines for paying and being late. And this is why systems matter, especially if you're already wearing 12 or 15 or 1,000 different hats in your business. So ignoring sales tax isn't just risky, it's actually poor stewardship. A business owner I recently worked with got hit with $12,000 in back taxes for the last 3 years of unfiled returns across 2 different states. It wasn't malicious. They weren't trying to not do it. They were just overwhelmed by everything that they had going on in their business. So let's not let confusion turn into compromise here. Peace of mind is worth that effort to get your sales tax figured out. Now, you don't have to do this alone, and this is really key here. There's tools like TaxJar, Avalara, and other people like myself who can integrate and help you with this. And the tools, TaxJar and Avalara and others, can integrate with your platform to actually track those thresholds state by state, helping you to automate filings and keep things compliant. They're not just there to add more complexity to your system, they're there to actually simplify it. So they're like the trail guide on a complicated route, right? They're worth every penny of getting you up and down that mountain. But software only works if you use it. So you can't just set it and forget it. You actually need to come back and review it and make sure and look at those notifications that those systems are sending. And that's where a CPA can really come in and help you, is to navigate through some of those trickier notifications and thresholds throughout all the different states. So here's the practical move for Private First, and that's just to open a separate bank account for sales tax. Now, I highly recommend it, especially if you're paying quarterly or annually into various states, so that you have that account so you can set aside the money so it's not lost when you have to come pay. So every time there's a deposit that comes in, every couple of weeks, you're going to transfer the amount that's for sales tax into that sales tax account. That way, when it's time to actually remit or pay the money, the sales tax, the money's already there. It's just set aside in that account waiting to be used. So there's no stress, no scramble, no guilt about, how am I going to get this? All there. That's vehicle stewardship in action. Now, sales tax doesn't have to be scary. It just needs to be structured. So you're going to start with what you know, lean into the tools that you've had, and build some rhythms into your processes. Because when you steward the small stuff faithfully, you build a business that actually is going to last for a long time. Remember Galatians 6:9, and just don't give up. Harvest is coming eventually. Now, if you have any questions, comments, or need assistance with managing your company's finances, don't hesitate to reach out. I'm here to really help turn inventory chaos and into predictable profit, help that cash flow. I'm here to help you experience real financial freedom. So schedule a call by scanning a QR code or clicking the first link below, or going to jacobcurtiscpa.com and scheduling a call. And don't forget to follow me, Jacob Curtis CPA, and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and we'll talk to you later.